Wednesday the 17th of April. New Zealand dollar collapsed against the US dollar yesterday, which is slightly irritating because I had a short on last week, which then got stopped. So I got the wrong resistance level. What did count was clearly the 2-month trend line here. It did hold, and then we collapsed from about 5 pips below it yesterday. So we hit all the targets down to 66.70. This looks negative. I'm waiting for this to go down, but unfortunately these days you have to wait for markets to go sideways for a heck of a long time before you get the move that you're looking for. On the weekly chart, you can see that we're holding a pretty important trend line that goes back to the second quarter of 2017. So that's pretty much a 2-year-old trend line. It comes in at around 66.70, 66.80. So you can see we just blipped below it and then strong recovery. It could be enough to hold it, and we could bounce back. I must admit, I wouldn't have tried along there. I wouldn't have been convinced it would hold. So I don't have any strong opinions on this. I guess that's what I'm trying to say. I'm just showing you the levels. Let me show you the daily chart. Okay, so perhaps the 200-day moving average will be of some effect. Sort of 67. Yeah, I think 67.30 would be the main resistance for today. Dollar yen is, well, it's trying to creep higher, but still being held by this almost 3-month trend line, which comes in at 112.20, and we also have the 200-day moving average. Well, this is, we're hovering around it. What is the value now? Around 112.00. So 112.00, 112.20 is definitely the resistance level to watch. The euro yen is basically holding the 200-week moving average, which is at around 126.90, 127.00. And you can also see it's holding the 500-week moving average down at 123.90, 123.80. 200-week moving average. I did say that, didn't I? That's the weekly chart. On the daily chart, which is less important, we've got a little trend line here going back to the beginning of November. So just watch that. That's what we need. The bears need the market below 126.10 to see a test of more important support down here at 125.75, 70. If we sustain a break above 127.00, obviously that's more positive, and we're looking at 127.40, 127.50, the highs for this year, and maybe even that will coincide perfectly actually with the 200-day moving average. So that's going to be the next strong resistance level. Euro US dollar is testing good support at 112.90, 80. So where have we been to? 112.77. I really think there's a good chance this will hold. I actually thought we'd probably hold a little bit higher up. I thought we'd hold the 100-hour moving average, but this is the hourly chart, by the way. 500-hour moving average and 2-week trend line down at 112.75. So we've got to hold above there. Break below 112.70 will not look good. I've got stops below 112.65 on my trade ideas spreadsheet. Anyway, I think we will bounce off here. Look, we're oversold, very oversold on the hourly chart too. So I really think we'll bounce off here. And once we're back above 113.00, that will look more positive. Then we've got to get up through 113.10. And as long as we can hold above there, it's going to be happy days for the bulls. This could really be the start of a bull trend. I'm really thinking that we can hold on to this trade. Well, we're going to struggle around 113.45.50. But above there, we've got quite a good run up to sort of 114.30.40 area. We'll see. That's a long way off. Gold's working out okay. I've been speculating that this downward channel over the last 2 months, 2.5 months, would develop further, and it has been doing so. So obviously we did have some important resistance around the mid 1280 area, put it that way. Yesterday, having broken below it, that 100-day moving average proved to be good resistance at 1288, 1289. So we've now come down to test the 500-day moving average, which was my target at 1275, 1274. So I think this is working out as I'd expected. We are overbought in the short term a little bit, possibly a bounce from here, but I think it's too risky to be long. I'd rather wait and then sell in the mid to high 1280 area. Anywhere from 1285 to 1289 with a stop above, let's say 1292. I think that would be a reasonable trade. Obviously, break below yesterday's low at 1272 would be a pretty significant sell signal. I see no reason why we can't come down to 1250 quite quickly. So there's quite a big move on that potentially. I'm feeling quite negative about gold. What would change my mind? We'd have to start holding above 1290 for me to change my mind, and then I would see a potential move up to 1300. Oil, I've been talking about sideways action in a bull flag formation with a break higher eventually, perhaps later in the week, and that could be what's happening now. You can see we've tested this 1, 2, 3.5 month trend line. We just blipped a little bit below. Where did we get to? 62.99. Good recovery, and now perhaps we short-term chart showing this little bull flag here, and we're just trying to break above the trend line. So it looks pretty positive for oil. This just looks like a consolidation pattern with a break higher eventually. I just looked at the WTI report and I had a buy at 63.25.15 with a stop below 62.90. So that certainly worked well yesterday. Right, look at this. I talked about the resistance. Our target for the move on the Aussie dollar, on the Australian versus the New Zealand dollar, was 106.00 area. I said this was probably too risky to short, but I would be buying on a dip down to 105. Well, anyway, we didn't get anywhere near that. But you can see how significant that level was around the 106, well, the 38.2% fib at 106.17. Whilst it held initially, and we just went mostly sideways, the break high yesterday really did see this rocket. So once we were through 106.25, the previous high, bang, straight up to the next fib level, 107.24, that 50% fib. We didn't even pause at the 200-day moving average. I don't know if you were trading that and if you jumped into a long on the break higher, but anyone that did is looking pretty good, and it still looks pretty positive. We're very overbought, but I certainly wouldn't be selling at the 50% fib. I've really been ignoring the Canadian dollar lately. It's just been too difficult to trade. It's just been going sideways. This is the Canadian dollar against the Japanese yen. Just note how well the red 200-day moving average has worked as a resistance level all the way back to May 2018. Good resistance here again, not so much here, but then good support once we've broken above it in October. And again in November, and then we broke below it at the beginning of December, and it worked perfectly as resistance on the bounce. Now, did a pretty good job in end of February, beginning of March, although we did spike above there and then close below it. So it would have been difficult to trade that, I admit. So the question is, 84.46 is where it sits at the moment. If we get up there, it's a fair way away, but I just thought I'd point it out if you are looking at that pair, that that could act as quite a good resistance level.